Welcome back. You're watching Ask Profit on NDTV Profit. Now, we promised that we'd be delving a little deeper into what's happening with the markets right now. And who better to ask than individuals that are part of among the biggest dealing rooms in the country. We've got Deepak Jasani, Head of Retail Research at HDFC Securities, and Gaurav Dua, who's Head of Capital Market Strategy at Sharekhan by BNP Paribas. Gentlemen, thank you so much for joining in. A lot of our viewers are trying to understand what is happening at this juncture. And there are some explanations that are being floated, and perhaps a conversation with you will help them get some clarity. Deepak, I'll start with you. One of the points that is being raised is the possibility of margin calls being triggered, cash not being added by clients, and therefore securities being sold into. How plausible is that as an explanation?
Yeah, good afternoon. Now the Murat trading session of the last session, which we had previous session, and that session ended with gains. So in that sense, margin calls this morning will typically depend on the MTM losses till yesterday. So whatever losses have been made on the Murat trading session or prior to that, for that the margin calls will be made today. But I don't think that was a very big amount in any case, because Murat trading ended in the positive. Today, there is a fall in the market. So probably tomorrow morning, margin calls may happen in case markets don't recover by the end of the day and clients are not able to top up their MTM losses.
Gaurav, I want to understand that what is the kind of client exposure right now in terms of derivatives, and how much of that allocation is towards the longs?
So, I think most of the clients are not over leveraged. That's what we have seen. System has become extremely tight. So it is not like past when markets will fall by 200, 400, 500 points and it will trigger a massive kind of, margin calls and, so I don't think we are in this in this thing then kind of this market where margin calls is a trigger for a sharp fall in the market. What we see is that every year Nifty does go down by 8, 10%, 12%, and we have already we had just had a fall of around 9.5 percentage points from the peak. So I think this is something which most of the investors will this thing take in stride. The problem is in the small cap, micro cap space, some of the overheated spaces where the fall has been much, the sharper. Stocks are down by 20, 25, 30% plus. And there you don't have margin funding. Okay, so I don't think margin funding or the squaring off is an issue as of now in the market. Yes, as the other participants said, tomorrow morning you might know the figures and it will not, I don't see it as a this thing very big issue unless the market keeps falling down like this for a couple of days, 2 3 days. Unless you see that, I don't see margins as an issue.
Fair point. Just help me understand further, Deepak, what the kind of behavior is that you're seeing with your clients right now. Because another kind of talking point has been that while we've seen the benchmarks drop, as Gaurav just pointed out, 9 percentage points odd for the benchmark Nifty 50, less so for the broader market benchmarks over that same period, we've seen a few stocks where you've seen sharper cracks. The point that is being raised is that positions are not being kept for long periods. Out of 10 positions, say for example, 2 are being kept, and so therefore this is not something that could exacerbate, and that lends itself to what Deepak is just talking about, or rather what Gaurav is just talking about. What would you tell us with regard to the behavior of your clients? Are they adding cash where required when margin calls are getting triggered?
So it will typically depend from client to client and their trade mix. So in case they are more sort of focused on derivatives or FNO, then probably At some point, they will take a call that they have to get out, they have to square up and wait out for some time before they have a clearer view about the direction of the market. In case they are invested in the cash market, and most people will have money to sort of top up at times of weakness. Uh, so there also, I think people will continue with their cash positions. Very few will sort of want to exit their profit making and loss making both positions, try and square up them and sort of sit out for some time. But most cases, people will top up their losses, pay up their MTM losses, and wait out for better times to come. Unless, as Gaurav mentioned, the markets keeps falling day after day for the next 5, 7, 10 sessions. At which point the patience of the cash investors will also get tested.
Gaurav, you said that you might expect further fall in the markets. So, overall picture, I want to understand. First off, do you think that the markets are oversold? And secondly, when do you expect this selling to, overall take a pause or maybe take a stop, and thereafter we see a correction and we see some kind of positivity or some kind of green signals in the market going forward?
So yeah, I mean that's I don't have that kind of a skill to correctly predict the market for a day or half a day or 2 day. But then if you see in this fall, basically the large investors institutions are going short. That means there's likely to be more weakness in the market. Retail, on the other hand, today in the FNO have actually built up their long. So that is how the market is as of now looking. So I think if you expect some more weakness, that could be the case. However, where it will take the support is something I think we'll know in the hindsight only. But given the past history, as I said, 10 to 12% kind of a pullback in the Nifty happens every year. So that should not be honestly surprise to anyone.
Gaurav, just to follow up to you, of course, you can't project or predict when things will turn. Nobody can do that, really. But the question to you is there some element of spooking taking place based on the kind of global events that are just a day or two away, particularly the uncertainty with regard to the US elections, particularly in the context of the kind of selling 1.25 lakh crore on a provisional basis by foreign institutions in the Indian equity market?
So you mean I think we have been extremely lucky and blessed in this fall because there was so much of strong domestic inflows that 1.5 lakh crores have been got absorbed with only this 8 to 9% fall in Nifty. So I think markets have done this thing pretty well in that sense. Secondly, I think markets, if you look for a leading indicator where they're going to stabilize, one is that, as I said, the retail will have to stop building longs, which I don't see as of now. Secondly, the India VIX index is still in green. Okay, so volatility index is going up. Unless you see first signs of India VIX actually cooling down, you cannot expect markets to stabilize. Okay, so I think these will be two basically indicators for everyone to look forward to.
Right. Deepak, just for viewers' context, I want you to explain that why has the India VIX gone up so much, and what is the kind of trend that you expect going forward as well?
India VIX has gone up. I think it closed yesterday at about 16. Uh, it has remained in a band of about 12 to 16, 17 for quite some time. So in that sense, volatility, now currently it is at 17. So 12 to 17 is a normal band for the VIX. We are at the upper end of the band, no doubt. There is a event because of which the volatility is high, the US elections, and US Fed meet, and the result season. There are three things put together. So it's not surprising that the is inching up, but historically the VIX has gone up to much higher levels in the past. So compared to that, I think we this is under. There's nothing to get overly worried about these levels of the VIX.
Fair point. Deepak, I'm just curious about the kind of selling that you're witnessing, whether it is concentrated in any specific pocket sector-wise, and in your opinion, are there any pockets that are poised for more selling where you anticipate that things could get worse?
So today, I think we have seen some weakness in the refining stocks because of a brokerage report which has sort of downgraded their rating on all the refining stocks. There is some selling in auto stocks, mainly because of the monthly sales number. Wholesale numbers have been good, but retail numbers, people are still awaiting as to how good or otherwise they have been. So from day to day, you will sort of get sectors which are under selling pressure or which are witnessing buying. So secondly, if there is a lot of FI selling happening, then typically it would be a basket selling in most cases, whereby all about 15 to 20 or 30 stocks will see selling pressure at a particular point of time, and the index will come under pressure. So a lot will depend on the near-term developments in the respective sectors, and that is how those sectors will get impacted either on the positive or a negative side.
But Deepak, I want to understand that the selling has been happening since the past few days. Do you see any sectors which has stood strong against the kind of selling that has already been happening in the markets? And do you expect those sectors to probably perform better as compared to what other sectors are seeing in terms of pressure?
Yeah, so I think two sectors stand out. One is BFSI and the other is IT. So they have sort of fallen less than the others, withstood the overall negative sentiments much better. And going forward, also, I think we had slight negative news for the banking sector in the sense that the credit growth for the fortnight ended 18th October came in at 11.5%, which is at a multi-month low. So that is a slight negative for the BFSI. Otherwise, I think BFSI and IT could sort of outperform even in a downtrending market for some time.
Gaurav, do you want to add to that? And also, question is, how are you advising clients right now? Of course, it would depend on size, scale, and proclivity. But broadly, how are you advising your clients?
So, for about month and a half, we've been asking our clients to reduce exposure to small cap, micro cap stocks, momentum stocks, because, you have had a 17, 18 months of a one-way rally in the small cap index. And if you see the past 20, 25 years, on an average, a small cap rally lasts for around 18 months. So we had already had that, and maximum of small cap rally has gone for around 20, 21 months. So it was time where the risk reward was much better in this thing large caps compared to small caps, and this thing that is quite evident. Also, we were asking our clients to take home some this thing profits in the spaces that has been doing well, like power, defense, railways, and stuff like that, where the valuations have become extremely overheated. So that has been our stand for past 1.5 month, 2 month. Now, talking about the spaces which are doing well, which are not doing well, I think they are very closely linked to what happened in Q2 earnings. We've been talking about events, but we haven't talked about how the earning growth has slowed down. Started in this in Q1, and it is very evident again in this in Q2. So the biggest disappointment which has come here is that the consumer spending has slowed down. Rural was supposed to pick up, which has actually not happened. Urban spending is also weak. So if you see, basically FMCG, autos have been no, largely underperformers. On the other hand, we have seen asset quality issues in case of NBFC. So that is also a space which have been the worst hit. So this is all linked to how what have been the outcome of quarter 2 results. On the other hand, what we have seen is that some of the private bank, some of these basically this real estate companies, IT companies, which have shown uh, decent numbers and given a better outlook of growth, have been actually been the outperformers.
Right. Okay. And thanks for that summation. Deepak, last thoughts from your side. I've asked Gaurav already what he's been advising or his team has been advising clients. Do you want to add to that? What have you been telling your clients?
Yeah, so blind investing in micro, small, and mid cap stocks to be typically avoided. That goes without saying. And but at the same time, one has to realize that small and mid caps will give you the best alpha. If you don't want to if you want to stay away from small and mid caps forever, then probably you should go to mutual funds, the large cap mutual funds or the index mutual funds. So you will have to be on the lookout for stories within the small and mid caps where the stocks have come to an attractive level vis-a-vis the growth expectation of their earnings, and take baby steps or do SIP investing in those stocks. Monitor them very closely, look out for any red flags continuously, and when you think that their valuations are have gone beyond what the bull markets also deserve, then better to start unloading gradually from those stocks.
Uh, Deepak, Gaurav spoke about earnings. I'm curious about what you made of that because there have been a few very key disappointments. In fact, if I look at the development today itself, and Gaurav did mention that in the auto pack, wholesale numbers are a bit of a disappointment in certain pockets, and that's evident in the way that the stocks are getting battered a little bit, right? So, what did you make of the areas where you were most or most disappointed, and are there areas where you're seeing that it's a blind buy at this juncture based on the earnings that you've seen? They were better than you expected and valuations have corrected, and so it's a blind buy.
So earnings this time around, I think the profit growth will come at a multi-quarter, 16, 17 quarter low. So in that sense, there may not be any blind buys as such in terms of sectors. It is all very, very relative. Now, the commodity-based sectors have performed the worst, whether it is metals, oil and gas, cement, chemicals, etc. So they have performed the worst. So going forward, I think one will have to look at whether these commodity plays are reaching any attractive levels, so that you can ride the bounce or maybe the next big run. And a lot will depend on how the Chinese economy starts behaving from now on, based on the stimulus measures which have already been announced and some of which are expected from here on.
Just want to point out very quickly that we are off the low point of the day, gentlemen. You're obviously looking at your screens as I am right now. We're down about 1.5% for the Nifty 50, as compared with 2% when we started this conversation, or thereabouts. Actually, at 11:30 or thereabouts, we're at 2% down.
Right.
Yeah.
I think, Alex, another pocket which is seeing significant pressure today is the oil and gas space, and it's down almost around 3.5 odd percent. But like markets are recovering. Even Nifty oil and gas has recovered from its day's lows and currently trading around 2.8% lower. But Gaurav, I want to understand overall a lot of things are not working for OMCs. Brent prices have been up around 4%. Q2 earnings have been weak for all of these OMCs. Production outlook overall remains uncertain. So your outlook on all of these OMCs, and how does one play with these stocks at present?
Right now, in the oil and gas space, what we have been talking about, recommending to our clients, and what we like is the entire companies in this gas chains. Okay, right from this Petronet LNG to GAIL to the to this thing IGL, NGL. So I think there is a space which don't get constantly or regularly affected by the this thing regulatory changes. So that's where we see this thing value. This thing, valuations are also on our side. So that's where we've been focused. OMCs have become extremely volatile uh, because of the volatility in the crude oil prices, and that makes it very very tough to take a buy and hold call.
That's a fair point. Deepak, Gaurav, thank you so much for joining in, for the perspective that you gave us, most insightful. And on a day like today, our viewers will certainly appreciate the time that you've spent with us.
My pleasure.
All right, now let's very quickly take you through what we have not spoken about while we were speaking to those two gentlemen. And the fact is that, and we were pointing it out very quickly, but let's take a little bit of a closer look at the patchwork right now that we were showing you on the screen in terms of sectoral performance. You'll see VIX is still elevated. It's up about 6% or thereabouts. But you have the Nifty IT that is currently, has come off. It's down about 1/3%. And that was what Deepak was just mentioning in terms of the stocks that have not gotten beaten out as much. BFSI not to that extent. It's still down, the Nifty Bank down about 1% or so. But you have oil and gas that is one of the pain points in trade today. And let's talk about OMCs as well as gas stocks. And this is also on the back of the commercial LPG cylinder price hike. That is also playing into the kind of reaction that you're seeing in the stock markets today. Mika is joining in to tell you about the potential impact on the OMCs if this hike, or rather of this hike. Mika, what can you tell us?
Good afternoon, Alex. So, you have the Nifty oil and gas down about 3.8% intraday. When you talk about the top losers, you have companies like IOCL, BPCL, HPCL, and Reliance Industries. And the Indian oil marketing companies have fallen over 4% intraday. Now, when you talk about what's not working for the OMCs, well, up first is the volatility in Brent prices. While you do stand lower on a one-year basis, they have seen almost a 4% uptick in the past week itself. And the OMCs also posted a weak Q2 earnings. They have extended LPG losses. Now, they did announce a commercial price hike by 62 rupees for the 19 kg cylinder. However, when you talk about, while this could offer some relief on the LPG losses that the companies have been facing, they have been facing majorly losses on the retail part of it, which is currently played on a subsidized race. The market's not, you can see while this would be positive for the realizations, the stocks have corrected. When you talk about what's not working for Oil India and ONGC, well, production outlook remains uncertain. The companies are yet to post their Q2 results. And lastly, when you look at the city gas company pack, well, IGL, MGL, GGL are all fallen 2 to 4% on an intraday basis. One of the major, headwinds for the sector is the lower APM gas allocation, which impacts their operating costs and thereby their profitability. Analysts also expect near-term margins to, remain under pressure, and the PNGRB notice to end network exclusivity is also a key overhang.
Yeah, thanks so much for putting that into perspective for us, Mika. And certainly those stocks are among the worst hit, particularly in the large cap space, if you were to look at it. And some of those stocks will play on the screen. But one key aspect this week, apart from everything that you're seeing in the global space, talking about US elections and Fed meet and everything else, action in the primary market in India is certainly something to watch for. And it's something that Mahima is tracking very closely. The Swiggy IPO, a lot of people have been speaking about it for so long, particularly because of the interest that celebrities have had over the last 3 or 4 months, people trying to get in early.
Right.
But that issue, the size of the issue has actually shrunk a couple of times. It is at what, 11,300 odd crore rupees, and it's a tough week for them to launch their issue.
Absolutely, absolutely. It's a tough week, but the interesting part is that Zomato will now have a peer to compare with. So it's probably good for the entire quick commerce and the food delivery space overall. Just to give a brief about the IPO details, the Swiggy IPO will open for subscription on 6th of November and end on 8th of November. The issue price is set between 371 to 390. It has a fresh issue of 4,499 crores, and OFS stands at around 6,828 crores. So the total issue, as Alex rightly mentioned, stands at around 11,327 crores. Now the market value as per upper band stands around 87,299 crores. Now in terms of how these proceeds will be used by Swiggy management, well, they'll be repaying the Skutsi borrowings of around 164 crores. Further, they'll be expanding their dark stores and will be investing around 1,178 crores there. They will also be investing in technology by around 700 odd crores, and further they'll be investing in branding and marketing and promotional spends of around 1,115 crores. Now in terms of the financial metrics, when it comes to talking about the Swiggy IPO, it's but natural that we have to compare it to Zomato.
But the sticking point, Mahima, is going to be the fact that they are not yet profitable, and it's going to take quite a bit for them to be profitable. And so therefore, will the street have the kind of patience that they would anticipate or hope that the street would have to wait for 5-6 quarters for a profitable turnaround?
Absolutely. So the analysts suggest that it's around 5 to 6 quarters away from being profitable. So that's one of the pain points for Swiggy right now. But the street might take it positively because it is coming at a lower valuation as compared to Zomato. So that's the plus point for the Swiggy IPO. In terms of financial metrics, as you rightly mentioned, it's around 4 to 6 quarters away from turning EBITDA positive. Currently in Q1, it had a negative EBITDA of around 544 crores. And overall, in terms of metrics also, if we see, they have been improving in terms of FY24 to Q1, even in terms of contribution margins. Swiggy's performance metrics have been improving. So that's a positive definitely for Swiggy IPO. But let's see what because with the kind of swelling that we are seeing, I mean, it'll definitely be an interesting thing to watch out for.
And even at this juncture, despite the kind of drop in prices, Zomato is still one of the stocks of the year. So we'll have to see how Zomato also reacts once Swiggy comes through. Absolutely. But with that, we're completely out of time on this particular edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Do stay tuned. This is NDTV Profit.